up, friends? It's Tess. This is Wonder Wealthy, and today I'm going to share with you the 5 most popular, most common investment myths that I hear all the time, and I believe that they happen to keep people from getting invested in the first place. So I'm going to bust these myths for you so you no longer have to believe these rules and live by them, and you can start investing to see your wealth grow. If you're new to my channel, welcome. Here we talk all things personal finance for millennials to help them make smarter and savvier financial decisions as they go forward in building wealth. Go ahead and hit the subscribe button so you can stay in touch with new videos that I post weekly. And if you like this video, if you want more investment videos, then hit that thumbs up so I know to make more. Let's get started with myth number 1, which is one of the most popular myths that I hear all the time. And although I think it's been busted, I still hear it. It still gets brought up. And that's that people feel like they don't have enough money to start investing. Like they really have seen that you have to have $10,000 or $100,000 or $1 million to even start investing. And although that was the case back in the day, pre-internet, it's not necessarily the case anymore. Yes, there are still people out there that in order to invest with them and have them manage your investments, you have to have a certain dollar amount. But if you want to do it on your own, which is absolutely doable, you can. There are a lot of platforms out there that have $100 or even $0 minimum account balance requirements. Now there really are a ton of platforms that have popped up over the years online that can super easily help you get invested. But there are different platforms for different investor types, in my opinion. And I have 3 favorite platforms that I will share with you today, just to give you an idea of how they suit different needs. The first one would be for the DIY investor, someone who's gonna totally do it themselves. And it's just a standard low-cost brokerage account, which I hold mine through SCHWAB.com. Now, SCHWAB, if you do a general Google search, you'll see that they have a $1,000 minimum account balance requirement. However, if you connect your bank account to do automatic $100 monthly deposits into your brokerage account, they waive that $1,000. So instead of $1,000, now you can get invested for as little as $100. Now, not everyone's going to want to completely DIY their investment strategy, and that leads me to my second favorite platform, which is M1 Finance. They also have a $100 minimum account balance. So for as little as $100, you can start opening your account and getting invested. Now, this is a platform I like to call, it's a mixture between a kind of do-it-yourself brokerage account and a robo-advisor, because they do have some automatic helpful things like automatic rebalancing for your investment portfolio. You can also build the asset allocation that you're targeting, and then they'll automatically piece out your money to go to those specific things. However, through M1 Finance, you get to specifically choose which funds or stocks and bonds you want to be invested in. And they don't charge any management fees for these additional automation features, which I think is really great. Now, if you're ready for something even more hands-on, so you can be even more hands-off, then you could turn to a robo-advisor. That's the third platform that I'm talking about, and my favorite is Betterment. They have a $0 minimum account balance requirement, so you can get started investing for, I don't know, $1, I guess, because $0 wouldn't do you any good. With a robo-advisor, you set your goals, and by them understanding the timeline you have until your goals and how much risk you're willing to bear, they will manage your investments. All you have to do is just make your contributions. And of course, because they're gonna be helping you manage these investments, they will charge a small fee, but it's considerably less than what you would pay someone to actively manage your account. Investment myth number 2 is that you have to be really stinking smart to start investing, and you gotta research a bunch of companies and find the winners and find the losers and hear the news early and pay attention and do all this work. And the honest truth is the most prudent strategy for investing is actually the easiest one. By taking a lazier, long-term passive investing strategy approach, you can actually do just fine for yourself over the long run. There's lots of stats, reports, research, and articles out there that prove that actively picking and choosing and doing all that research really doesn't pay off, because on average, 90% or more people who do active portfolio investment management, well, they don't end up even beating the market. So if you want to get on board with a passive investment strategy and you want to learn the ins and outs of how you would set one up for yourself, then join my 10-day Investing 101 bootcamp. I'll send you 8 emails over the course of 10 days to help you get invested, I guess, in 10 days, but maybe less. Go to wanderwealthy.com/invest to sign up. It's free. Investment myth number 3 is something I hear a lot from the younger crowds when I'm talking to universities or high school students, and that's because they understand investing as something that is very risky. Something else they understand that is very risky is taking on debt, and there's this confusion that when you invest, you could potentially owe someone money at the same time. Like if you buy a piece of a company and that company goes out of business and that company owes other companies money, then you also owe people money. And that, it just isn't the truth. When you put up, let's say $100 to buy a share of a company, and if that company goes out of business, then your share just goes to $0. So although yes, you can lose all the money you invest, you can't end up owing more money than what you had originally bought in for. Now there are some nuances and more complex investment products and strategies that do end up getting you in that debt trouble, but if you're the average investor, you won't be presented with these opportunities. And if you see anything about buying stocks on margin, just stay far away from that. Essentially, only buy the amount of shares of a fund or an individual stock that you can afford from the cash you have deposited into your brokerage account, and you should be just fine. The 4th myth is that paying someone 1 or 2 or even more % of your assets to manage your investment portfolio is worth it because the more you pay, the better they're gonna do. The truth is, the only guarantee that you have when you're paying someone else to manage your portfolio is how much they're going to make from investing your money. The biggest thing that investors need to know before getting invested or working with an advisor is that your fees that you pay will eat into your average annual returns over time. And there is no proof that paying someone more will get you better results. Sometimes you can even do it yourself, pay way less in fees, and get better results. I teach some of those things in the Investment 101 Bootcamp. And the 5th myth that I hear all the time, and I think it's the number one thing that keeps people from getting invested in the first place, really pulling that trigger and sending their money to an account and buying those shares, is that they feel like they need to get in at the right time. The honest truth is there is no right time to get invested in the market, and every time is the right time to get invested in the market because no one knows when the right time is, and the people that think they know are really just speculating, and thus they're taking an active investment approach because they're trying to guess how they're going to time the market. And it's been proven that people really suck at doing that. So my challenge to you is just to figure out when the right time for yourself is to get invested. That means, when do you have the money that you could set aside and forget for the next 10, 20, 50 plus years? If you have some of that money worked into your budget, then you're ready to set it aside into your investment account. Make sure you have your emergency fund fully funded, and your debt, especially the high interest rate debt, you have a plan to pay that off. And then if you can find that excess money through your income streams or find additional income to put into an investment account, then you know you're ready to get invested, and you should just invest on a regular, consistent basis. Not worrying about when the right time is, but just set your own schedule and go with it. And those are the 5 most popular investment myths that I hear all the time that I really think keep people from pulling that trigger and starting their investment journey. And I promise you, investing early is going to pay off. So do it now, but do it wisely. And the number one piece of advice I can give to you is know why and how you are investing. And you can start doing that by getting into my Investing 101 Bootcamp. It's free, it's 10 days. Go to wanderwealthy.com/invest to sign up, and I will see you there. I'm gonna be coming out with more investment videos, so make sure you subscribe to my channel so you can stay up to date with these, and hit the thumbs up button, and be on the lookout for a fun announcement that will be coming shortly. All right, until then, I hope you wander wealthy. Bye!